Welcome to Illuminati Silver. We tell you the truth about silver. Today is Monday the 30th of March 2020. And yesterday we produced two, hopefully topical videos. One entitled, Will Cash Pour Back into Equities Soon? And the other, Why You Should Look Out for the Job Figures This Week. And on Saturday, we of course published our weekly gold and silver update for the week ending 27th of March. And we've placed links to all three of these videos in the description box below. Now in these, we pointed out that whilst we believe gold will remain reasonably positive, we still have some doubts about silver being able to maintain its recent rise, at least short term, and that we should also watch out for the job figures this week, both the weekly job figures, the ADP figures, so ADP on Wednesday, weekly job figures on Thursday, and then the non-farm payrolls on Friday, and further look at equities, as it will not be long, arguably at least, before they will look like a bargain proposition to many professional investors. Now also last week we commented on why, in our opinion, one should not pay outrageous premiums for physical silver, provided you can get it, of course, and also to watch out for the same happening in the gold market, and that there will be opportunities in the months ahead to acquire both of these precious metals with much reduced premiums, and that it may be wiser, at least short term, to consider acquiring alternative forms of gold, whether it be scrap or jewellery or non-coins, providing, and this is important, providing they're close to or preferably at or below spot price, or alternatively, consider using organisations such as Bullion or dealing via SLV or GLD. There are, of course, a number of reasons why premiums have risen, not least being unprecedented physical demand has caught most dealers and mints short. Supply and, of course, transport disruption links have been disrupted to the extent that one cannot move these precious metals from either the country of mining to the country of distribution or the country of acquisition. And we cannot rule this out entirely, although we don't place too much emphasis on this. Each dealer or person within the supply chain also using that opportunity to make some extra profits. Because to be fair, since 2011, there have been limited opportunities to do so. However, we admit that the almost JIT or just-in-time supply processes which have been adopted, with no mint or wholesaler or dealer wanting to hold unnecessary stock levels, especially with volatile prices, even though they hedge them, means that even in future, when there is excessive demand or surprise demand, we shall see similar premiums being charged, which does not truly reflect the global mining position of these precious metals, but just the immediacy of availability at the time. Now this morning we thought we should look at two articles published by Bloomberg for interest, one a few days ago and one this morning. Now before we do that, it's worth noting that as we produce this video podcast, it is 11 o'clock GMT, we can see that overnight and this morning, Asia-Pacific markets are down an average of 1.5% and European markets are down an average of 1%. At the same time, gold is down $9, but is up £2 because of the weakness of sterling against the dollar this morning. And silver is down 51 cents or 29 pence. We suspect we shall see silver potentially breach below the psychologically important $14 level, but it does remain quite supportive. Mentioning the dollar strength, we can see that the dollar spot index is up 0.45 at 98.8. So let's listen to these two articles, or at least excerpts we've taken from these two articles. Bloomberg Article published 25th of March 2020. Headline: Gold coins have never sold at premium this high for so long. Sales of retail gold coins are revealing just how desperate investors are to find a safe haven. People have always been willing to shell out more for retail coins than gold sold in the spot market. But that premium has more than doubled and at times quadrupled over the past 2 weeks as investors seek a safe place to park their cash in the face of global market turmoil. Dealers such as Gainesville Coins have never seen prices this high for this long. Quote, virtually every dealer in the country, unquote, has been so overwhelmed by demand that orders are backed up by at least a month, said Everett Millman, a precious metals specialist at the Florida firm. What is roiling markets and stoking demand for the safe haven is also paralyzing supply. Around the world, flights are getting cancelled, trucks are getting held up, and metal refiners are shutting, making it harder for traders and banks to shuttle their gold to vaults in major trading hubs such as London and New York. Quote, some wholesalers are currently not taking orders. Wholesalers, mints and refiners are either low on stock or out of stock, unquote, said Ronan Manley, an analyst at Singapore dealer Bullion Star. Supply for bullion coin orders is limited at the Royal Canadian Mint, which has temporarily suspended production. American Eagle gold coins are selling at a 5% premium, the highest over the spot price since the 2016 Brexit vote, according to Gainesville Coins Millman. Spot gold is trading down about 1.3%, near $1,610 an ounce, after rising the past 3 sessions. Bullion futures also fell to settle at $1,634.30. Along with surging prices, Gainesville Coins is facing a month-long delivery backlog. Quote, when you look at a jump in the premium like that, that's definitely an indication that demand is higher than supply. All the supply chains are backed up for at least a month, unquote, said Millman. As recently as 2 weeks ago, premiums for gold coins were at 1 or 2%. Silver coins are also in demand, with premiums for that metal at 50% over the spot price, compared with just 5% a couple of weeks earlier. End of article. Excerpts from a Bloomberg article today dated March the 30th, entitled Gold Retreats After Best Week Since 2008, as Caution Reigns. Now the article was published at 6:01 GMT +1. Gold declined after its biggest weekly advance since 2008. The dollar climbed and Asian equities fell. Volatility has spiked this month as, in addition to the supply squeeze, some investors sold the metal to raise cash to cover losses elsewhere. The dollar has also emerged as a preferred haven, heading for its best month since late 2016, amid concerns over liquidity and funding conditions across markets. Quote, liquidity will likely be the key focus in the next couple of days as we approach quarter end, unquote, said Howie Lee, an economist at Overseas Chinese Banking Corp. Quote, similar to what we saw in early March, investors might be looking to cash in on their gold holdings with bouts of selling pressure to surface. Given the current levels of treasury yields and the dollar strength, gold is still trading below what we deem as fair, and we remain bullish on the precious metal, unquote. With signs that the historic gold squeeze is easing, investors' focus returns to measures from governments and central banks to cushion the fallout. President Donald Trump signed a $2 trillion economic stimulus package on Friday, the largest in U.S. history, while the Federal Reserve has pledged unlimited bond purchases. Elsewhere, the European Central Bank scrapped most of the bond buying limits. Quote, the precious metals sector has been the clear winner from the unprecedented U.S. fiscal measures to support the reeling economy, unquote, analysts at Australia and New Zealand Banking Group Limited said in a note. Spot gold declined 0.5% to $1,620 an ounce at 11:03 a.m. in Singapore after earlier gaining 0.6%. Prices jumped 8.6% last week and are on course for a sixth quarterly advance. The Bloomberg Dollar Spot Index added 0.4%, also set for a quarterly gain. The spread between London and New York gold prices stood at about $30 an ounce on Monday, compared with more than $60 last week. Open interest in April COMEX futures continued to decline on Friday, while open interest for the June contract picked up. Money managers cut their short position in gold by 78% in the week ending Tuesday, the most in government records going back more than a decade. In other precious metals, silver fell 3.3%, platinum dropped 3.2%, and palladium advanced 0.4%. Holdings in exchange-traded funds backed by palladium are near the lowest since 2008. End of article. So we can see that although stocks achieved a recovery last week, equities are not out of the woods as yet. Silver is certainly taking another hit as the global trade position forecasts deteriorate. And gold, whilst holding up well, is still subject to a degree of the vagaries of US dollar strength. We stated in our weekly update that this will be a most interesting and potentially volatile week, with a considerable amount of economic data being published. What are your thoughts as we are about to enter a new month? Will gold prices be higher at the end of April than they are now? What about silver and equities? And also, of course, not forgetting oil prices, which have fallen again this morning, with Brent crude down $1.91 at $23.02 and WTI crude down 92 cents at $20.59. We would love to hear your thoughts. Thank you so much for listening. If you haven't already done so, please subscribe to our channel and press the bell sign so that you're notified of our videos as and when they are published. And not forgetting, of course, that we update our Richard and Greg channel every other day. And so if you haven't already done so, please subscribe to that one too. We hope you have found this video interesting and informative. And if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.